Hello, students and teachers. This is Todd Horowitz from highschoolinvesting.com, coming to you from the floor of the CME Group in Chicago. And of course, for the last 18 weeks, you've been watching this consolidation pattern across all markets. And guess what? Well, we finally are in the next phase of the market, which is what we would call we're breaking out to the trend. Now, again, I did not believe that the trend would be higher, but certainly all evidence is pointing that the trend is now going to be higher because we've now broken out to the upside in the NASDAQ, Russell, S&P, and Dow. The first to break out was the Dow, and the last to break out was the S&P, but now we're all broken out and looking that we're going to move higher. So now what you look for as you're trading, you now look for support areas to buy. So any sell-off that comes back and stays above the old resistance of that consolidation band, for example, in the S&P, if we stay over 2190, anytime we dip back to 2190, you'd want to be a buyer there because from a technical standpoint and aspect, that is the right level to buy. You look for it to hold there and then bounce higher. So what we look for is, it says the trend is now up. We want to look to be a buyer of support when a market sells off into a positive trend. And the opposite occurs when we break to the downside. You look to sell into resistance because what you're really doing is you're buying into a market where there's maybe some panic or some fear of maybe we're going too far too fast, so people will look to sell off. That's where we look to be buyers because that gives us the greatest edge when we're trading in the markets, is to really be against the overall crowd by using good solid technical levels that allow us to do these types of trades. So now we're looking for a little bit of a pullback, and we'll see it at 2190. Now we may not get back there, we could continue to go higher here, because if you take a look at a chart like the Russell, you're seeing what we would say a parabolic move. So the breakout in the Russell is not as good as some of the others. If you take a look at the Dow, you're going to see straight consolidation for 7 days and then spiking higher again. So that's more of a solid uptrend. And what you want to look for now is the opportunity right now is to be a buyer on support. And until we violate that and go back into either into the consolidation range or start a trend to the downside, we're only looking to be buyers off of support levels based on the major indexes. So what you really want to watch for, we want to know if it's a false breakout. Now in the Dow, we can say it's definitely not a false breakout. We've been out for over a couple of weeks. In the S&P, it's still going to be false. So there's a lot of diverging markets. There's a lot of signs that show that there could be potential problems. But in the meantime, from an overall straight, unemotional standpoint, markets are moving higher, and we got to look to be a buyer support. That's what you want to watch in this. So we're now into the second phase of the market, which is what we call the breakout phase. And this time we're breaking out to the upside. This is Todd Bubba Horowitz. Have a happy Thanksgiving, everybody. Coming to you from the floor of the CME Group from highschoolinvesting.com. Thank you so much.